Hi, everybody. Wanted to give you an update on two different statistics that are happening right now. Number one is rent growth. Number two is the foreclosure rates. And I want to put it in historical context over the last 15 years because it's real important. So the reference for my data today is the core logic, CORE logic. Rent growth is posting what they call the highest rate since a year ago. So, and that rate is like 3.4%. And I want to put in perspective that rents have been going up kind of forever. And that's good news for investors and landlords, tougher on tenants, which would be a good reason to buy. And for the real estate realtor clients, this is an important fact for you to be selling, I think, to your clients. But from the investment standpoint, if you look back in the graphics they provide in this article, rents have basically been kind of flat, right? They travel in a band of about around 3%. I'm just going to round it off to, I'm going to call it 3%. Sometimes 0, sometimes 4%, a little bit more, 6%, but mostly in a pretty well-defined band of about 3%, give or take a little bit. Now, the two big exceptions to that were in the Great Recession back in 2008 through 2010, almost 11, rent went down dramatically. So instead of going up about 3%, the bottom peak was a negative 4%. So about 4% decreasing in rents as at the worst time, and in that band, it's kind of a V shape. It was, the rents really started going down quite a bit, and then they hit 4%, and then they started coming back up to the normal rates of about 3% per year of rent inflation and rent growth. And then it was before that, it was kind of the same thing. You got that 3 or 4% band, then it goes back to that 3 or 4% band. Then we had another major event, COVID, in 2020, 21, 22, and there was another spike. The rents went up dramatically, right? And instead of just a down 4%, which is what we had in the earlier era in the Great Financial Crisis, rents went up 16%. So, if there was a 4% drop, it went over that 4 times that, up to 16%. And that was for a similar period of time, 3 or 4 years. And there was a massive spike in rental increases. Then it came back down to our normal market nationwide. And what you can take away from that is just know that, hey, it's not just, rents are 3% higher. It's 3% year after year after year after year after year, right? It just keeps rolling. So if you're an investor, you're getting that compounding effect of the rent. Maybe it was, say, $1,000 one year, then it's $1,030, then it's $1,060, then it's $1,090, then it's $1,120, right? So you see how that multiplying effect is just very, very powerful over time. And the rent growths during COVID far outweighed anything that happened in the Great Recession, where we lost some ground on rental rates. So that's just the information that I wanted to provide for you on that. The other thing is that I wanted to talk today a little bit about foreclosure starts. And again, this is a similar story where you have to look at it historically. And what we have is foreclosures going up again now here in 2024. There's a little bit of a bump in foreclosures. But historically, what you got to do is look at all the way back into the 2005 era. So the last 15, 20 years, you got to look back and what was it? And we're really at a stabilized place in foreclosures if you look at 15 years ago. And then we had a massive amount of foreclosures leading up into the Great Recession in the 2008 era. And it was unbelievable the number of foreclosures compared to what was normal. It went up like 9 times higher than normal. So it was just incredible. And then it's been tapering off over these years since 2008 and been kind of steady. Then we dropped off at COVID. So it was the opposite, less foreclosures during COVID. Then it's kind of back up to its normal pace. So just affecting the housing market, the rental market, foreclosures are right where they maybe are historically. These bumps that we're seeing in the market right now are not historically significant, I don't think. And there's a lot of equity in the marketplace because property values have increased so much. And people have a lot of low interest rate financing, and that's all created a very nice real estate market for owners of real estate. You're in a good position. Most owners are in a very good position with lots of equity, lots of appreciation, etc. So we're in a good, stable market, a very strong market for owners, for sellers. And again, I want to look at that over the past 15 years, not just this year, not just this quarter. You got to take a long-term view in the market and just look at those rental rate increases, just chunking out that 3-4% every year to keep up with inflation and to handle that, as well as the market increases, et cetera. And then foreclosures indicating a pretty strong market for us as well. So I want to give you that data. And if you have questions about it or how it affects your portfolio or your particular property, we'd love to talk to you at any time. Give us a call. Jeffrey Jinks, we defend your territory.